Hi everyone, Arnold Van Dyke here, Director of Tax Services with Tax Audit, and today we will be discussing IRS installment agreements. So let's say you owe the IRS and you've determined that you do not qualify for an offer on compromise or for currently not collectible status. You've also exhausted all other remedies such as audit reconsideration, innocent spouse, penalty abatement, and you still owe the IRS. So how can you resolve the tax liability and steer clear of the IRS collection actions such as liens and levies? So the answer to this is obviously setting up an IRS installment agreement. An IRS installment agreement can be very easy to set up, or it can be very complicated depending on your circumstances. If you owe the IRS less than $50,000, the IRS will accept any offer you make for an installment agreement as long as it pays off the balance in 6 years or less. This is through the IRS Fresh Start Initiative. If you owe the IRS more than $50,000 or you're proposing an installment agreement amount that will not pay off the balance in 6 years or less, the IRS will require you to complete a collection information statement, Form 433A. This form can be found online. The Form 433A is going to ask for your financial information similar to what the IRS asks for in an offer on compromise. It will require you to disclose all bank accounts, provide either the last 3 or 6 months of bank accounts, depending whether you're a wage earner or self-employed. Would ask you to disclose all forms of income through wages, Social Security distributions from partnerships, S corporations, etc. And then it'll also ask for your expense information, your housing and utilities, for food, clothing, operating vehicles, health insurance, current estimated taxes, other secured debts. And this form basically exists for the IRS to determine what they believe your monthly installment agreement amount can be. Now, setting up an installment agreement with the IRS can be burdensome, especially if your case is not assigned to a revenue officer. If you're dealing with the automated collection system in the IRS, generally you want to call in or complete the form and mail it into them and wait for the IRS to answer you. This process can take a very long time. Now, during that process, you have to be very mindful of the IRS letters that you are receiving because you don't want to go into active collections. Obviously, before the IRS can take any levy action, they do need to send you a final notice of intent to levy, which does give you the opportunity to file a request for a collection due process hearing. So just always be mindful of preventing any levy action. The same with a lien. If the IRS sends you a notice of federal tax lien, you can also request a collection due process hearing at that point. Our advice is always, if you receive one of these to request a collection due process hearing, you do not want to give up your rights to offer the IRS a collection alternative. And also, if they don't agree with the installment agreement amount that you propose, if you do not request a collection due process hearing, you are giving up your rights to appeal a decision and ultimately take the IRS decision to tax court. Now back to the installment agreement. The IRS also has national standards for items such as food, clothing, and then also local standards for items such as housing and utilities, vehicle operating expenses. And generally speaking, if your actual expenses are higher than these standards, the IRS is within the IRS's discretion to allow the full amount of the expense that you're claiming. It really depends on the person that you're dealing with, whether they will allow that. Unlike an offer on compromise, they generally will not accept anything higher than the standard for determining whether they'll settle or not. They do have discretion to accept a higher amount and consider your actual expenses if you can obviously prove the actual expenses are higher than the local standards where you live. Now, the same is if your case is assigned to an IRS revenue officer, they also are going to want to see if you're unable to pay in full, what you can make as far as a monthly installment agreement amount. And if you're unable, once again, to get a resolution with that revenue officer, you can request an appeal either through a request for a collection due process hearing if the revenue officer sends you a final notice of intent to levy or a notice of federal tax lien, or if you've already missed these notices, you can also request an appeal through the IRS Collection Appeals Program. The Collection Appeals Program is a little less formal than the collection due process hearing, and you can also not appeal a collection appeals program determination to tax court. So you are somewhat limited as far as what you can do through the collection appeal program process. So that's what we have to discuss today as far as IRS installment agreement. If you need any assistance setting up an IRS installment agreement or reviewing your tax case in full, feel free to give us a call or visit our website www.taxaudit.com. Thank you.